In a regular bank run, you rush to get your dollars out of a bank. In a central bank run, you rush to get your gold out of dollars. Today's video is brought to you by Miles Franklin. These are the weekly specials for bargain hunters. You can get 100-ounce silver bars, only $139 over spot per ounce. Call 855-GAME-END or email endgameinvestor@milesfranklin.com. If you want something a little bit more practical but a little bit more expensive, there is the silver maple leaf coins. 1-ounce coins for only $3.75 over spot. Again, call 855-GAME-END or endgameinvestor@milesfranklin.com anytime, and we will answer any questions you have. Looking forward to speaking with you and answering your emails. Hey guys, Rafi here from the End Game Investor, and today we're going to talk about two things. One is Jay Powell's fantastic interview on 60 Minutes with anchor Scott Pelley, who kind of sounds like Dana Carvey's impression of Tom Brokaw from Saturday Night Live.
Is the national debt a danger to the economy, in your view?
Gerald Ford dead today at the age of 83.
And we're going to incorporate within my review of that interview, in certain very interesting clips in that interview, a discussion of New York Community Bank Corp, which seems to be undergoing a bank run right now. And by the way, the Endgame Investor has moved to Substack, endgameinvestor.substack.com. You can subscribe there for free. And if you want my monetary coverage, 3 times a week newsletter, you can become a paid subscriber, and all paid subscribers by the end of February will enter into a raffle to win a 7.77 gram silver coin, a silver temple coin made by the Germans who think they are from the tribe of Ephraim. This is the other side of it. I'm not sure if you can see it so well, but this is a temple coin. It has the third temple on one side and the 12 tribes of Israel on the other side. I did not make this. I have no association with them whatsoever. They just gave me a few coins, so I'm giving some of them away. That is, of course, the third temple that started this current war in Israel, according to the Muslims. And I was actually one of the people that was on there on October 5th doing Talmudic rituals, which basically involves praying and asking God for peace and help. But, whatever. I did it. It's my fault. Sorry.
I did that. I was reckless and I was wild and I did it.
Anyway, if you want to be part of this raffle, then become a paid subscriber at endgameinvestor.substack.com. And let's go to the 60 Minutes interview.
Jerome Powell, the chair of the Federal Reserve, may have just rescued the economy from inflation without throwing millions out of work.
Gerald Ford senselessly shot dead at the age of 83.
Good.
Oh, really? Soft landing. Well, the only reason that we haven't been in a catastrophic tailspin yet is because there's so much money left over from the 2020 and 2021 printing that it's still flowing into the banking system. And those are, of course, the reverse repos that are bottoming out now. We're still at about $500 billion left. As long as the money supply continues to suck from the reverse repos, we won't be in a catastrophic tailspin in a Keynesian sense. But once those things bottom out, the soft landing that we are currently experiencing, quote unquote, will crash and burn. I guarantee it.
Inflation is tumbling while employment is near a 50-year high.
Employment being at a 50-year high, well, what was the unemployment rate in Weimar in 1923? Basically zero. What is the unemployment rate of basically every hyperinflationary economy that has ever existed? Basically zero. And why is unemployment so low in a hyperinflationary economy? Because the hyperinflation makes labor costs so cheap that everybody goes to work. You know where else there was never any unemployment and unemployment was at a permanent 70-year low? That would be the Soviet Union, where everybody was employed doing absolutely nothing and they all starved to death. The next question he asks is about symmetrical inflation. Will Powell wait for inflation, what he calls inflation, for the consumer price level to fall to 2% a year in order to cut rates? And his answer is no.
Are you committed to getting all the way to 2.0 before you cut the rates?
No, that's not what we say at all. No.
But what about the whole symmetrical inflation deal where you want inflation to level out to 2% over time? So in the era when the CPI was below 2%, let's say 1.5 or 1.6%, he would justify being above 2% for a long time to measure out, to average out where the CPI is. So it would average out 2% over time, but that's only when inflation is below 2%. But when it's above 2%, you don't have to wait for it to go below 2% to average out to 2% over time, because you can start cutting rates even before it hits 2%, which means this whole 2% thing, this whole target is a bunch of nonsense, which is what Peter Schiff says all the time, and he's right.
We're committed to returning inflation to 2% over time. I've said that we wouldn't wait to get to 2% to cut rates.
So you got to wait until inflation is way above 2% in order to raise rates, but you don't even have to wait for it to hit 2% in order to cut rates. Well, let's take a look at this. This is the CPI. And here is, let's say over here, let's zoom it in for, let's say, do a 5-year chart. Here's the 2% line. You see, during this time, 2019, and into 2020 and even to January 2021 or February, March 2021, inflation was below 2% most of the time. And, I don't believe in any of these definitions. These are all nonsense definitions. It's just a consumer price level, which can't really be measured, but be that as it may, his argument here was, since we've been below 2% for so long, we have to wait for inflation to hit 4 or 5% in order to raise rates, because we want an average symmetrical inflation rate of 2%. But right here, how long have we been above 2%? Well, since, let's see, March 2021, and we're still above it. So since March 2021, it's now December 2023. That is 2 years and 9 months above 2%. So in order to average a 2% symmetrical inflation rate, you'd have to wait not for it to get to 2%, but way below 2% to measure out, to average out to a 2% CPI inflation rate. But now he's not even going to wait for it to get 2% in order to start cutting rates, because, this is really consistent.
And what is the danger of moving too late?
If you move too late, then you might policy would be too tight, and that could easily weigh on economic activity.
Well, more accurately, the problems with being too tight and waiting too long to cut rates is that banks are going to fail. We already saw that with Silicon Valley Bank and the other regional banks. And now we're seeing that with New York Community Bank Corp, which is now undergoing a bank run. Depositors are fleeing and the stock is falling. Governance and executives are jumping ship. The whaling ship has been attacked by Moby Dick.
Was the Fed too slow to recognize inflation in 2021?
So in hindsight, it would have been better to have tightened policy earlier.
Oh, so now inflation wasn't transitory. Whoops. It would have been prudent to tighten policy earlier. How about not printing $5 trillion in a few months? How about that?
How would you characterize the consensus around this table for rate cuts? Is everyone on board?
Tragedy today as former President Gerald Ford was eaten by wolves. He was delicious.
Almost all of the 19 participants who sit around this table believe that it will be appropriate in their most likely case for us to cut the federal funds rate this year.
This calls for an aggressive trading strategy.
Good idea, sir.
Are you saying my money's all gone?
Oh, so the whole Federal Reserve Board agrees. Well, that's very comforting. It means that if they all agree, they must all be right. Yeah. And so we're going to start cutting rates sometime in the middle of this year.
Cuts in the federal funds rate would likely be a quarter, maybe half a percentage point at a time.
A quarter or half a percentage point at a time.
A quarter of a point. Let's take enough money out of that place so that we never ever have to sit in a cubicle ever again.
When you start seeing trouble in the banking system, they're going to cut to zero and maybe even below zero immediately. And I don't think the banking system is going to last until they get to the first rate cut. Maybe it will by the first, but sometime by April, May, June, something like that, the banking system is going to implode because they're going to run out of money from the reverse repos, and all of the debt that they have to service, the dollars are not going to exist in order to do that. You're going to start seeing more bank runs from more bigger banks, probably bigger than Silicon Valley Bank, and then the Fed is going to have to bail them out all over again.
So the prices of some things will decline, others will go up, but we don't expect to see a decline in the overall price level. That doesn't tend to happen in economies except in very negative circumstances.
You know, if Scott Pelley were an honest journalist that was actually trying to get to the truth, maybe he'd ask Jay Powell about the entire 19th century when prices were constantly falling and we had the biggest industrial growth in the history of the world. Was that a negative circumstance? Well, no, because money was gold and silver back then, and prices always fall in terms of gold and silver all the time. They only rise in terms of inflated money, not in terms of real money, which is why real estate, commodities, pretty much everything, stocks, bonds, they're all cheaper today in real money terms. Prices always fall because people produce more stuff than they consume with capital, and that creates a falling price level, and that creates prosperity. So rising prices are what creates poverty. But did he ask any of these questions? No, because he's a puppet who sounds like Dana Carvey impersonating Tom Brokaw on Saturday Night Live.
Gerald Ford was mauled senselessly by a circus lion in a convenience store.
If you think about the basic necessities, things like, bread and milk and eggs, prices are substantially higher than they were before the pandemic. And so we think that's a big reason why people have been relatively dissatisfied with what is otherwise a pretty good economy.
People are dissatisfied with what is otherwise a pretty good economy because the stuff that they need is getting more and more expensive in the crap money that they earn. Well, what was the economy? What did the economy look like in Weimar? Well, you had people spending money like crazy, huge amounts of money all the time, instantly, instantaneously. GDP grew to infinity, but people were not happy with an infinitely growing economy because they couldn't afford bread and milk. That's a pretty serious thing. When the GDP numbers are rising, but people can't afford to eat, that's not a good economy. That's a good inflated Keynesian fake economy, but nobody gives a crap about GDP numbers because GDP can't feed you. GDP is just the circulation of the amount of money in the monetary system. It doesn't matter how much there is or how little there is. What matters is what you can afford to buy with it. And people cannot afford to eat with the money that they are paid with, then they are unhappy with what is otherwise a growing economy.
What is the likelihood of another real estate-led banking crisis?
I don't think that's likely.
What is the likelihood of another real estate-led banking crisis? 100%.
Certainly there will be some banks that have to be closed or merged out of existence because of this. That'll be smaller banks, I suspect, for the most part.
Smaller banks for the most part, yeah, like New York Community Bank Corp. Yeah, well, it looks like that's going to be dead in the next few days. Let's see who's next.
Silicon Valley Bank, second largest failure in U.S. history. Did the Fed miss that?
So, yes, we did. A bank run can happen so much faster than it could have even 20 years ago.
Yes, you missed it. But even if you didn't miss it, it would require inflating anyway. And even if you never miss a bank run and you just keep inflating all of these bank runs away, eventually you will kill the dollar, which is exactly what you're going to do. In a regular bank run, you rush to get your dollars out of a bank. In a central bank run, you rush to get your gold out of dollars, which means you sell your dollars and you buy gold or silver, or really any real asset, and the Federal Reserve is left with all of the paper, but none of the real assets. So we're about to stage a bank run on the Fed itself. I don't think Powell is aware of this.
In the long run, the U.S. is on an unsustainable fiscal path. It's time for us to get back to putting a priority on fiscal sustainability, and sooner is better than later.
So Powell says it's time to start being fiscally responsible again. Well, let me ask you this, Jay. If you had a kid who was a junkie and he's doing coke and heroin all the time, are you going to provide him with more drugs, or are you going to cut him off and put him in rehab? You see, if Congress keeps spending money, especially if they want to lock down the entire country and spend trillions of dollars, and you're going to provide them with the script to do that, that is just enabling the drug habit. If you want Congress to be fiscally responsible, then you got to stop printing the money and buying their bonds so that they can keep spending and accumulating deficits. But this is all Keynesian point, because you can't really do that in an inflationary system. If you stop enabling the spending, the entire banking system will collapse. There is no way out of it. The debt always has to increase at an exponential rate, which means you have to print the money for the debt to increase at an exponential rate. And if you stop that exponential expansion, the entire banking system that you manage will go to hell. And there is no way out of that. There is no way to get back to fiscal responsibility. There is no way to get back to monetary responsibility until the whole thing implodes. And that is where we are headed. There is no other way out of this. There's no such thing. There's no option of fiscal responsibility, because once you have fiscal responsibility, you have a dead banking system, which is destined to die anyway. And why is it inevitable? Because in order to expand the money supply, you have to expand the debt supply. And once you expand the debt supply, more people have to pay back more dollars to service that debt. So they need more dollars. So the Fed needs to print it. And in order to print it, it needs to print more debt. In order to pay that debt, you need more dollars. See, it's a loop that is inescapable. So it's not like Congress can fix this by suddenly becoming fiscally responsible, because if they do, the banks die. And here's where Powell talks about how he does not incorporate politics into his decisions because, integrity.
If we tried to incorporate a whole nother set of factors in politics into those decisions, it could only lead to worse economic outcomes. So we simply don't do that, and we're not going to do it. We haven't done it in the past, and we're not going to do it now.
There are people watching this interview who are skeptical about that.
I would just say this. Integrity is priceless.
We are so close to all being together. We can sense it. Heartbeats come out of our chest, getting closer and closer together. Priceless. Learn more about the vaccines and start something priceless.
Integrity is priceless. From the man who destroys your currency, who destroys your standard of living, and who enables the global war machine. This is the man of integrity.
Banker types come along telling us we're all in the new normal, as they try and turn God's green miracle into an easy buck for themselves. But you know what? Those guys. They ain't got no integrity.
This is Rafi of the Endgame Investor. If you've enjoyed this video, then sign up to be an Endgame Investor subscriber at Substack, link in the description below. Founding members will get free access to my Patreon, which you can also sign up for separately for $3 a month to get my weekly biblical lessons on monetary policy, economics, and government. And I'll see you guys on the Silver Report at Chris's channel at Arcadia Economics. I'll see you guys here next week.
Don't you wish everyone had some damn integrity? Well, soon, everyone can.
Is inflation dead?
Stunning news from Yorba Linda today, as Richard Nixon's corpse climbed out of its grave and strangled Gerald Ford to death.
Today's video is brought to you by Miles Franklin. These are the weekly specials for bargain hunters. You can get 100-ounce silver bars, only $1.39 over spot per ounce. Call 855-GAME-END or email endgameinvestor@milesfranklin.com. If you want something a little bit more practical but a little bit more expensive, there is the silver maple leaf coins. 1-ounce coins for only $3.75 over spot. Again, call 855-GAME-END or endgameinvestor@milesfranklin.com anytime, and we will answer any questions you have. Looking forward to speaking with you and answering your emails.